Welcome, good evening, good morning. We have Monday, we have cycles time. It's the foundation for the study of cycles. My name is Lars von Thienen. I'm a member of the board of the foundation, and I would welcome you to our weekly cycles review. If you're new to the session, you're welcome. What we will do here is we will take about 15 to 20 minutes to check the current cycles based on current data from the markets. I will show you what the cycle scanner shows us for active cycles, what cycles are detected. You get a kind of feeling of how the cycle analysis works, and we will use current data and not historical data. So you might get a feeling of how cycle analysis on current market data might look like. We don't do market forecasting here, so it's up to you as receiver what you do with this analysis. This is kind of training, education, and learning how to use cycle analysis. We will use the cycle analyzer we have in our foundation here. So this is how the picture looks if you open our cycle analyzer. What are we doing today? So for today, besides going through the main data of the markets, I would like to pay attention on two topics. So while I'll browse through current cycles and market data, please listen carefully to two key topics I would like a little bit to emphasize for today's session. So you know I always try to bring some topics across. If you are a first-time user or new to the cycle scanner at all, I mean the primer is mainly if you want to adjust your market pools, because these are a lot of questions which arrive. You can customize the market pools to your needs or whatever you would like to favor here. So you see the settings symbol in the upper right corner there where my mouse is currently moving. If you click on this symbol, this will bring you to the configuration page. And in this configuration section, you can change the symbols you would like to track automatically. So you can remove them. You can even add a new cluster, and you can put new symbols into each cluster. So we start with a basic set, which gives you kind of starting points for major markets, but I think then it's up to you to configure this. If you need more information on the symbols, just click the link here, new symbol, the icon, and this will bring you to our documentation where you can read about different symbols here. Just if you're a new starter, I will use the standard setting here to bring us into the session. Besides that, this is live, this is not scripted, so feel free to drop me your notes in the comment section. I always keep an eye on the comments and we can browse through your questions. So let's start. Let's go over some main markets and main cycles we see. So, I mean, commodities is the first section which is activated here. Let's open gold data here. So this is the current gold data. I will just zoom in a little bit here. As you know, I always have a first look at the spectrum. This is the cycle spectrum, which is shown here, where I have a look for clear peaks in the spectrum. Yeah, this could be seen clearly with a length of 203 and a cycle with a length of 131. Then the second important measurement is to have a look at the Bartle score. The Bartle score is a kind of indication of the statistical significance of a cycle, which is clearly indicated by the green color of these triangles here. And the strength is a third measure here, which gives you here or visualized by the size of the triangles. So I think both cycle peaks here, 131 and 203. So here's the 131 cycle, and the other one was the 203 cycle. So these would be the key two cycles I would pick here in this case. And you see, I mean, the listing here on the upper right corner is just the table data of the spectrum chart we've seen here. So I'm using these two cycles as they stand out here. They have good strength, a good battle score, and from lengths you can then start to add shorter term cycles. You know, so if you just come from the strength, there are higher listed cycles, but they are shorter cycles. So I first start with the kind of main picture or overall picture, which could be very interesting if you select more the longer cycles first, yeah, which gives you a kind of indication where we are in the larger cycles, and then drill down afterwards into shorter time cycles. Okay, so I'm just checking the stream quality, but looks good. Okay, yeah. So from this point of view, I mean, what do we see in cycles? Interesting point here. I mean, we have anyhow told you about the upcoming top or projected the top here in August. And I think from this cycle perspective now, if we zoom in a little bit, now you can see it more clearly here, that these cycles or the longer term cycle here, it's predicting maybe kind of your bottoming phase here, and then an upturn here. So, and then now you can start to choose all the shorter cycles, but that's gold. Let's go to the major markets. So with the index section, let's start with the S&P 500 here. So there we have an interesting picture here, and this is the first topic I want to highlight for today. So because the cycle with the length of 170 something, you know, we are talking on the cycle for weeks and months already. So, but I think what's right now really interesting on this cycle is you could argue it's out of sync. Yeah. So this longer term cycle here, I mean, this has nicely helped us in spotting the top in February, the low in March, April, and projecting the top here beginning of September. But now if you have a close look, and this is what makes cycle analysis so complicated and sometimes not so easy as it might look like, you see since the mid-cycle point here, beginning of November, and I can even make it a little bit larger. So since this mid-cycle here, from beginning of November, it seems like price behavior and at least this main cycle with a length of 175 looks a little bit getting out of sync. So price is really rising while the longer cycle is still pointing towards low in December. Now it's very important to bring in this shorter term cycles. You remember when we have looked at gold, I just mentioned that it's important that from time to time you also then, after you have the bigger picture, you cross-check the short-term cycles here. And this then might help us. So also starting here from a scanner perspective, this is a cycle I've selected here, which is active for at least for the full year of 2020. We can call it the cycle of 2020 was the daily cycle of 174 bars, at least in the S&P 500. But if you zoom in here in this lower range, you see here in this area, there are two triangles in green and with a very large sign which stand out. So we should not forget them. And I will just zoom in here on the shorter time period. Yeah, you see these two cycles here with the length of 30 something. They again have a good battle score, so they are green. And they have a good strength because the size of the triangle here is also very large. So this is now exactly what can help us in explaining what's happening currently in the markets. Because if we move up here again and we see, okay, these two cycles here, these are exactly these cycles here, which are labeled here, 30, 32 with a high strength score. So if we add now this cycle with the length of 32, if you add up both, this picture might not explain the true story, what's happening here. But if you just look at the cycle with the length of 32 on its own, and let's zoom in a little bit, and you know, so this cycle clearly explained the upswing from beginning of November, at least into mid-November, end of December, where this shorter term cycle predicted a turnaround. And you can add then the shorter term cycles, and you see that the markets is currently in sync with the shorter term cycles. And if you just add the longer term cycle, the picture, the shorter term cycle is not visible in the composite because the amplitude of the longer term cycle masquerades the shorter term cycle in the composite view. And now I hope I can get this across, because the amplitude swings, which are shown by the composite, do not forecast the amount of price movements to the upside or to the downside. So this is now important to follow. The composite cycle, or a cycle plot of even one cycle, the swings you see, and it's just an overlay above price. So the swing size here to the down or to the upward does not forecast or indicate how high the price will move or how low the price will become. The cycles give you an indication on timing, not price movement in regards to the amount, how high or low it will go. And then the second measure now comes into play. And you might have thought about, what's cycle strength? Why do I need cycle strength? And the strength information is maybe more important, at least if it comes to trading. I mean, from a digital signal processing perspective, it's often even not used. If you do frequency analysis, I mean, cycle strength, what's that? So this is introduced because you need to understand not the pure amplitude, you need to understand what's the impact of this cycle on the expected movement from day to day, or at least bar to bar. I mean, it depends on what resolution you use, but if we have daily bars here, so you want to look for the cycle which have the highest impact on the movement per bar, because this is your trading horizon. This is what you're looking. If you want to use this information at least to prepare a little bit for trading purposes, you would not look for the highest amplitude or for the longest cycle. I mean, from a timing perspective, that's really interesting. You need to understand from the strength, the cycle strength, what's the important. And therefore, the cycle strength, which is listed here in our list, gives you an indication about what's the power or the strength of the cycle or each bar going ahead now. And there you see that the cycle, even with the lower length of 32, has a higher strength than the longer cycle of 175. So just from this list, I mean, it's pure sorted by cycle strength, nothing else, pure mathematical. It's not subjective here. It's really objective, filtered, listed by cycle strength here. So the cycle with the most impact on price movement, day to day, bar to bar, will have this at this current stage here. This might change over time, but at least at this stage here, you should follow the cycle with a length of 32. And now you need to look for cycles within cycles. So or to explain this, let's go back to end of November, because I remember a lot of questions around end of November. So let's go back in history here for a moment. So the light blue, I've now switched the end of the analysis to end of October, and the light blue here, to make it more clean, the light blue here is not known by the analyzer, and it just updated the cycles here. So this would have been the same situation as if you would open this cycle analyzer by end of October. And cycles, and this was the projection of our longer term cycle anyhow, which we repeated from time to time, the market top here in September, and then we had nice down move or sideways move, and then we approached this midpoint cycle here, and a lot of questions arrived. What will happen in the markets? And the longer term cycle is still pointing down. And at this point in time here, you see now that this cycle with a length of 32 is already marching up or stepping up the ladder. So if you have monitored your cycle analysis from day to day, you would have seen that the cycle with a length of around 30 would have marched up from the strength perspective. And so that's important of cycle analysis. It's not a static picture. You do it once once a month, then you draw your cycle analysis, and then you follow a static forecast. No, this is wrong. If you do this day by day, you see what happens to the cycles detected by the analyzer. And I mean, at this point in time, for sure, this is the cycle with the highest strength. But you now could start to look at the second cycle here. At least these are the two cycles with the highest strength. And if you know the approach, you should look at the maybe top 3 cycles anyhow. So you go with this, and then sorry for jumping around the topics. I would talk about the cycle alignment or cycles within cycles. Now you need to look out for phases when these two cycles are in alignment with their cycle phase. So at the time of end of October here, the longer term cycle, which is still with the highest strength, is pointing down. And just looking at the cycle with the length of 32, this cycle now starts to turn up. So at least the downswing here, where both cycles have been in alignment. Yeah. So you nicely see that the longer term cycle is moving down since September now, and you see how the phases aligned now with these phases. So again, at this point in time, and the same happens here at you could observe this by mid of September, the markets turned up in alignment with the cycle of the length of 32. And now at this point in time, even though the larger cycle turned down, again, the shorter term cycle of 32 has come into play with an upswing. At least you had a disagreement, yeah, with the longer term cycle and the shorter term cycle. So at least it's a point where you need to be very careful if you see two cycles or the top two cycles that are in disagreement with the cycle phase. Yeah, and these are the times when often the dominant cycle changes. And this is exactly what happened here by end of November, because if we update the analysis now again to today, you know that the cycle with the lengths of, let's open a clean chart here. The cycle with the length of 32 now has become the most dominant cycle. So the cycle with the length of 174 stepped down to the position 3. So at least, I mean, it's always easy to explain it after the fact, but the point I want to make here is that you always should look at the main 3 cycles and observe the key cycles on your cycle analysis, and never, because this could be a trap you might fall into. These points here define points in time, yeah, where the overall cycles change. These composite cycle forecast does not project price movements to the upward or downward in regards to the amount of price movement. So therefore, it's often very helpful to look at the single plot of a cycle and then check both cycles compared to each other to see if the phase is in alignment. Okay, so but I hope I got a point across, because and please do your own analysis on the S&P 500 and move back a little bit in time and switch between these two cycles. Yeah, 175, which is the key cycle here, and then at the midpoint here, you know that the cycle with the length of 32 has come into play, and now you can look for synchrony of these cycles again. Yeah, so look for cycles. Yeah, at least for today. I think it's not a complete learning session. So that's if we look at the key markets here. And I mean, the overall perspective has not changed here. So we are waiting for major bottoming, or if you just use these two cycles, which is still expected for mid-December, beginning of January, and then a large upswing cycle is anyhow in play between both the short-term and the long-term cycle here on the S&P. So let's get back to your question. I see there are some questions now rushing in. Okay, I just need to cross it. Well, if the future it's possible of adding an option to find stock whose main cycle is starting an uptrend. Currently, we need to check each stock individually. So you want to be on alert if the dominant cycle, or what I do here, selecting the most dominant cycle, is changing its phase, or it's approaching a main change in the phase. so that it's changing from a down move to an up move here. And yes, we have these features. This is then maybe an alert which you could activate. We are discussing internally in the foundation to provide additional features around the cycle scanner, and this then would answer your question in having this kind of features. We just need to find a way how to bring these features in, because mainly we are here the foundation for the study of cycles. And if we bring in all these nice features, which I understand might be helpful if you want to analyze and even do more forecasting, but we are not the foundation for stock market forecasting this way. And therefore, we need to find a real good balance between engaging the study of cycles, because there's a lot in cycles, and on the same perspective, being careful with just using 1 or 2 cycles for forecasting, because for forecasting there's a lot of others competencies required. But to answer it short, yes, your question is heard, and we are thinking about providing these additional features. The position of a stock in the cluster. That's a good question. I think right now it's just based on the on the procedure how you added that. So okay, I think the connection was dropped for a second, so please excuse the delay. I'm not sure when we have dropped, but I wanted to get back to your looks like my connection is broken, so I just need to reconnect here. Whatever happened to my internet? So I hope we are back here now stable. I'm very sorry for the disruption. And I want to get back to your question on the run, and I hope it keeps going now. Otherwise, we need to stop here. But on the run, I want to get back to your topic: which analysis frame has been used? And that's a good question. So what is being used for the analysis? So if you load up your chart, you can see first the information, what is used here, and let's make it large here. The information which is used for the analysis is shown here down below for the in-sample period. And the standard setting is that it just loads from the last data point, which is mainly today or the current date, then back for at least 3 years. Okay, I think I'm back on now. Yeah. To the topic here. So and it's around 900 bars or so. And this full data frame is used for the cycle analysis. So you can change this manually if you click the anchor to the right and the anchor to the left. So, and then update the data. So then you choose manually which time frame is used for the analysis here from start to end. But that's just picking the last three years, which around 800 to 900 data points. So that's it. So the quick answer is the cycle scanner looks for cycles in a range of 10 to maximum 400 days. So what you have, if you want to find cycles with around 300 plus a length, you should have at least multiply of 3 enough of data to analyze it. So the minimum data required to detect cycles with a length of 300 to 400 would be at least 850 to 900. I don't know what's going on. So, sorry, gentlemen. I think my internet is not stable for today. So I'm really going on and off, and I really need to excuse, but I don't know what's going on. It's as always, the full day is running, and then when you're going live, you have some breakouts here. So let me sum it up quickly before we break out again. So the cycle length used, you should have at least 3 times the range of data for detecting of cycles. So the cycle scanner uses at least a length of 0 to 400. So the minimum requirement is to have at least 800 to 900 bars. That's the standard setting, but you can adjust it to your need. If you have not enough data, the problem is that you won't detect longer term cycles reliably. If you have too much data, you're just trying to average the signal processing over the whole period, and you want to look for the current data. So therefore, you should find a balance between longer and shorter term cycles. Yeah, and Soros Epes, let me rephrase the answer to your question. To rearrange it, it's not possible yet to rearrange it, but I take your topic and we will align the cycle scanner and the market pulse configuration that you then in the future will be able to sort it by yourself. That's an easy point. So that's it. Yeah, at least for today. Maybe as we have a stable session, let me bring up the second point as a bonus, because you are still here and I want to talk about that. Because another question you always have is, Lars, when I see these cycles in the analyzer, what can I do to improve my technical analysis? What can I do to improve my forecasting if I look at current markets here? And one topic I want to at least give you a kind of idea, that you can use the detected cycle length here to fine-tune technical indicators. So, for example, and I've just checked this, if you go to Bitcoin and just check the Bitcoin cycles, I think we have analyzed the main cycles on Bitcoin. So here projecting anyhow more important down move, just picking the first 2 ones, and this is what we have told in the last market reports anyhow. But the most dominant cycle here has a length of 40, and you can use this to fine-tune your technical indicators. Therefore, I've just prepared a chart, but you can use TradeStation, NinjaTrader, Motive Wave, TradingView, whatever charting software you would like to. This is just an example. This is the Bitcoin daily data, which we had here in our cycle analyzer, now in whatever charting application you like. And I've just picked here at the bottom, just the relative strength index. Yeah, so nothing special here. I just want to make the basic point here. And what you see here down at the bottom is the standard RSI. I think it has a length of 14, which is a kind of standard configuration in any platform. And the key question is, no one knows how to configure the length of technical indicators. And that's where cycles come into play. You can use the length information of cycles to fine-tune the length setting of technical indicators, because the length setting of 14 here is giving you a lot of whipsaw trades. Yeah, here it's overbought, here it's oversold, but way too much signals below or above the threshold band. And this makes these technical indicators almost useless if you don't know how to adjust them. So, and what I've already prepared here on the topper lane, this is the RSI indicator, with a length of, let's use what we have detected, a length of 40 here. So, and what you now see, that you can see that it's not giving you so much false signals. So the signals you now see by the adjusted RSI indicator are much more clear. Yeah, if you check the oversold area here, so this would be then the buy from the RSI. Why you had 1, 2, 3, 4 signals here on the normal RSI, you just had these 2 signals here for the overbought signal here, and then maybe just this one signal here, while the other one gave you a lot of false signals here, and then the next one here. So the And you can even see this if you go more into the back here. So here we have clear sell signal at this point here. Then it goes down, continues to this low here, where you see on the standard RSI, it's always swinging forth and back. And this is what will give you ruin every trading system if you use the standard RSI here. If you tune it with the length settings of the dominant cycle in the market, so 40 here, you will see that the signals become much more clear and you don't get too much false signals in the market here. No? So again, this is the adjusted RSI with the dominant market cycle here, which gives you much more clean signals. Now here, so the clear downswing from here to here, and then the clear upswing from here to here. You see clearly given by the RSI. And I mean that's in the past, but what this will then bring you, that looking forward, these cyclical indicators are much better prepared on your chart than just using the standard settings. So this was the second topic for today to bring across you. So let's sum it up. So at least we've seen gold cycles, S&P. I've given you kind of indication when you should look for cycle strength and when these even shorter term cycles are very important and might be masqueraded by longer term cycles amplitudes. So do your work on the different cycles here. And the final topic is then at least that you might get an idea of how to tune technical indicators based on the cycle length information here. And excuse for the hiccups with the connection here, but it looks like working at home is during these times a challenge for the network providers. Thanks for staying with me in this session. I would love to see you next week on Monday, even if we approach the Christmas period. We will keep the sessions going, and I will keep to present you some analysis ideas on cycles. So I hope you can learn something, take a point with you, and I always try to keep an eye on your question to continue to come forward. So thanks for your time. See you next week. Stay safe and stay healthy.